Welcome to our webinar on entering the U.S. energy markets. Thank you for taking time out of your busy schedule today. But before getting into the topic, let me remind you that if you have a question during the webinar, you can click the Q&A button at the bottom of your screen and type your question into the window. We'll try to address all those questions at the end, but if we run out of time and don't get to your question, one of the speakers will respond by email. In addition, we'll be sending out links to all the registrants for today's presentation and for a recording of this webinar. First, a word about Skipping Stone. 2026 marks our 30th anniversary as an energy markets strategy and implementation firm. Skipping Stone's leadership team is made up of former CEOs and energy entrepreneurs who have successfully built and grown energy and technology businesses. Our speakers today will be Eric Allam, Skipping Stone Principal, and Peter Wygand, Chairman and CEO. Peter will start us off with an overview of the natural gas and power markets.
Well, thank you to everybody for joining. Hopefully this is informative. There'll be Q&A at the end, so hopefully you stick around for that. If we don't get to it, either Eric or I will email you or separately. Before we begin, a couple initial thoughts. We've been doing market entry in the U.S. for many years. Typically, the international companies look at the U.S. It's a mismatch patchwork of markets, regulators, business models, etc. And oftentimes we see companies that come to us and say, like, I'll give you an example. I want to acquire a retailer doing electricity only. We say, okay. And I want them to have X number of customers. Well, it's rare to find somebody with a lot of customers that's only doing electricity retail. And oftentimes they're doing gas, maybe they're doing solar, maybe they're doing demand response, what have you. So the point really is it's not uncommon to have companies with multiple strategies. So finding single shot or silo strategies of companies of any size is challenging. Smaller companies, it's easier. Our last point is, sort of self-serving. It's a very convoluted, confusing market. Hopefully today we sort some of that out. But having people that have been in it like us for 30 plus years is oftentimes we've seen a lot and done a lot. Next. So this slide I'm not really going to talk about because you're going to get this when you get the PowerPoint sent to you. But we often get asked, well, how big is this? How big is that? So this is sort of a market size, fast facts kind of thing that you can look at your leisure. Next. So one of the keys to the U.S. market, unlike others, like we do a lot in Japan, there's one regulator in Japan. The U.S., there's no such thing as one regulator. Everybody kind of knows who FERC is at the federal level. They set policy on wholesale trading, pipelines, transmission that crosses state lines, so forth. The key is the stuff has to cross state lines to be federal. So they have a set of rules. Then each of the 50 states has a public utility commissioner or something similarly named. So those commissioners in most states are appointed by the governor. Sometimes they know a lot about energy, sometimes they don't. They're the ones that set the rules within the state, especially important if you're into the retail or into the generation siting or that kind of thing. Then there's NERC, which is focused just on generation. They're the ones that set the reliability standards for what kind of reserve margins there need to be, reporting on transmission, distribution, etc. Then there's NASB, which is not really regulators. It's a nonprofit body of stakeholders from all different segments of the market. This is the group that sets the business rules. So like trading agreements, how scheduling works. There's a long list of these rules. So when NASB sets about and sets some rules, typically it goes to FERC, and 99% of the time, FERC turns them into rules, into market rules. Then you have the Department of Energy, the DOE, which doesn't really have it does think it's especially helpful if you're looking for funding for research or whatever, but they don't really have a whole lot to do with policy. And sometimes, like in the little gray areas, they get into areas you're like, what's this got to do with energy? But that's the federal government for you. You know, last you have the Environmental Protection Agency, which is mostly you look at that if you're doing fossil generation of some sort. That's really kind of their only impact. Next. So in the wholesale power markets, which is we get a lot of requests for, uh, there's a map here of the different ISO regions. So each one has its own set of rules, its own set of scheduling formats, its own technology requirements. So it's not a one size fit all, either from a trading or a tech perspective. Most of them do real-time day ahead, kind of spot market, if you will. Most of them, except for ERCOT, have some kind of capacity market, and then they also have ancillary markets. So all of those can be traded. All of those require technology. If you're in the retail, that's important. If you're into renewables, it's all important. So this is the wholesale power market. Next. Then you have the wholesale gas market. There's over 100 interstate pipelines, interstate being across the state line. There's a whole bunch, I don't even know the number of intrastate, which means it's within the state, especially Texas, Oklahoma, that kind of the part of. So you have also LNG exports, which is growing dramatically and continues to grow. So given how complex the wholesale gas market is, because with capacity release and some of the things you can do, there becomes pricing hubs where transactions happen. Everybody kind of probably heard of Henry Hub, but there's 9 other ones that you can see on this map. So how the physical market and the financial market and capacity market all work together comprise the wholesale gas market. So it also confusing. So for example, most companies entering the US, it's pretty unrealistic to think you're going to be nationwide in the natural gas business. You generally pick a region or an area that you want to focus on. Next. So this is the retail electric and gas markets. You can tell from the color coding, some are gas only, some are electric only, some are both. The white states, there's no competition whatsoever. In those states, the customers have to buy the utilities, period, and stop. I put on the right sort of the market share data of how much the retailers have versus the utilities as a set of stats. So even when you look at a state, like for example, everybody thinks Texas is wide open. It's not. Certain utilities, especially municipals and rural electric co-ops, are typically none of them are open. So, for example, Austin, San Antonio, and Texas, those are not actually open for competition. Those are still the monopoly model. Next. Here, I'm going to turn this over to Eric. Go ahead, Eric.
Thank you, Peter. Thank you, everybody, for being here. This is a great opportunity to talk about one of the most unique things that I've seen in 30 plus years in the U.S. energy business. Our industry is undergoing a transformation unlike any we have seen since the 1980s, with the beginning of the deregulation of the natural gas market. What's happening today in the U.S. is really a function of 3 key concepts. We're experiencing explosive demand, which everybody hears about in the news, that's driven not only by data centers, but other factors as well, including the reshoring of manufacturing, industrial load, not to mention, all of our dependencies on our personal devices, driving up power requirements. This is all happening during a time of unprecedented supply constraint, which is a function of both infrastructure related issues. We have a bit of an outdated grid that's rapidly trying to modernize, as well as the need for bringing more energy into play to meet that rising demand, primarily on the power side, but also, as you'll see, a function of natural gas being a key contributor to power generation is driving changes in the natural gas markets as well. And all of this taking place in a backdrop of regulatory chaos, which we'll talk to. The thing to understand is that these three key drivers are all interdependent on one another. And the way that they interact with each other has a lot to do with how you set strategy and tactical implementation in attacking the US marketplace. But the key thing to know is that it's a market rife with opportunity, but it's different than it was 20 years ago. The dollars are flowing into different sectors. The problems facing people are different today, and that's what we're going to talk about. Nancy, if you move to the next one. So let's dig into demand growth for a minute. We've all seen these graphs. We all know that demand is exploding. But when you actually get a chance to dive into it, you see just how much and how remarkable that actually is. After a long period of fairly static 0.5 to 1% compounded annual growth rate for power in the US, we're now hitting a period where people are anticipating, 3.5% plus compounded annual growth in demand. During that same period, we're seeing some increase in power infrastructure and natural gas market infrastructure investment. But that too is beginning to explode. In fact, over the next 5 years, we're likely to see over $1 trillion invested in energy infrastructure from just the utility sector alone, not counting private investment, projects undertaken behind the meter by industrial and commercial end users, et cetera. That 1.1 trillion represents double the amount that was spent on infrastructure upgrades over the previous 10 years. Next, please. So in the face of that kind of rising demand, you would think that there's all sorts of opportunities to supply that new demand. The reality is that it takes an average of 4 to 7 years to gain all the certifications required for new generation technology in the power sector. And depending on the technology, it could be less. But the result is that significant numbers of new projects have been applied for certification and approval through various regulatory agencies. But those same regulatory agencies were used to handling, X amount of applications that's now 10X. And they're trying to do it with the same resources, same outdated processes, same limited technology, same limited access to data for validation and verification. And it's creating what we refer to as our interconnection queues. The one on the graph here is from ERCOT, which gets a lot of notice as being a friendly place for new development. And in fact, even the ERCOT queue is stacked up in a manner similar to that which we see in PJM. On the right, we see other impacts associated with supply constraints. We all understand basic supply and demand. We have explosive demand, we have lagging supply. That's going to create a tightening in the market, which is going to drive underlying commodity prices. In addition to commodity prices, however, there are other factors that affect ultimate prices to consumers in US energy. That includes things like capacity and ancillaries and transmission costs. There's been a lot of news recently regarding PJM's capacity auctions, which set capacity values for the following year and look forward for a 3-year period. As you can see from the graph, we've seen an explosive spike in capacity costs, which are ultimately have to be driven through the value chain through the utility to the consumer. This has gained the notice of politicians. The bottom line here is that we need to move faster. And as a result of that, large buyers are not waiting for regulators and new market rules to accommodate the challenges that they see, but rather they're finding their own solutions. Traders have a volatility field day in front of them when you think about constricting supply and demand and the need for risk management in the face of, this kind of forward price uncertainty. And new technologies that address power concerns in one way or another, or efficiency in natural gas production and utilization, have vast opportunities in front of them over the next several years in the US. Next. So in all of this, where are the regulators? Well, the regulators are in a fairly chaotic place. as suddenly energy pricing, which is a complex problem that's forcing itself onto center stage in an environment where very few people actually understand what drives pricing of energy in the US market. Consequently, the politicians are looking for soundbite answers and anything that they can find that seems to be a simple answer to a difficult question. For example, in New Jersey, which just held a gubernatorial election in November, the winning candidate had promised to freeze utility rates on day one if she was elected. During her inauguration, she followed through on that promise to a degree. She immediately said that she was going to increase subsidies to help consumers in certain economic classes be able to absorb utility cost increase. What she didn't get into is exactly how that was going to get paid for. And she didn't freeze utility prices, but rather took the approach of saying, we're going to hold off on any new rate case filings from utilities to the commission. In other words, we're going to regulate prices by just not showing up to any meetings where you ask us to raise prices. These kind of sound easy solutions really don't have the right answers for the market as a whole. And in all of this, the utility commissioners, who most people don't even really know exist, are also getting a wake-up call. Even in the deep south in the US, in Georgia, there were a couple of utility commissioners that ran for re-election and were surprisingly defeated by candidates who promised simple answers to the complex problem by saying, we're just not going to let utility prices increase. So what does all this mean in terms of how we address or think about the political dialogue today? But you have to understand that politicians' statements are not necessarily policy statements. So President Trump, for example, has a style where he likes to say things to provoke a reaction, but that doesn't necessarily mean that a policy and new market rules are going to follow. So we need more supply faster. We need flexibility deployed to be able to meet changes in demand. And we're experiencing a tremendous amount of growth opportunity with massive amounts of capital at stake for new market entrants. So let's take a deeper look at the technology sector. Go ahead. So where do the opportunities lie in all of this in the technology arena? Well, energy storage systems are seeing equally explosive demand. People understand that storage creates flexibility and power delivery. So both at the utility scale and behind the meter, storage projects and storage technologies are a very hot item in the US right now. Along with that comes a lot of ancillary things like the need to finance all of that. Financing both utility scale and behind the meter projects is an area of significant interest for global investment companies. Forward price risk management associated with the optimization of charge and discharge of storage is another unique area of opportunity today. Across all of optimization and energy management, there's a need for technology solutions, both in the controls area as well as in the data and analytics areas as well. Utility and C&I long-range energy planning is another area rife with opportunity. The utilities in the US have spent literally decades filing, annual long-range planning forecasts that typically rely on a 1/2 to 1, maybe in an aggressive year, 1.5% expected growth rate over the next few years. We're now seeing things where utilities publish a long-range plan in, call it Q1 of a year, and by Q3, they're revising that number by upwards of 30% in terms of expected annual growth. This is a situation that has completely overwhelmed the processes, standards, and cultures that have driven utility planning for years. New solutions for helping bring utility planning into focus are a critical success factor for the US as a whole and provide unique opportunities for entrants who want to come in to help solve that problem. Next. So you've heard us talk about the fact that the US is not just one market, but rather a series of fragmented markets. From what I've just heard or what I've just said, hopefully what you're hearing is that there are two types of problems to solve. One is at the macro level, whether that's in policy, regulatory, market rules, how the overall market is going to work. And the other is at the tactical level with individual customers who are facing these problems, don't have answers, but need access to solutions now that allow them to mitigate the risk and exposure that they have as buyers of energy in the U.S. So figuring out which segment you want to go after and what problem you're solving is a key first step in a U.S. market entry. Now, the the other important thing to remember is that even if you have a self-contained solution, we do this really cool stuff and we have great software that drives all of that. You need to understand that it's only a part of a larger integrated energy puzzle for a buyer or even at a utility scale. People need answers that have interdependencies across multiple different technologies and asset types, and the ability to integrate those and be able to control those from a single optimization point is an area that is going to become increasingly important at both the macro and the tactical level in the US. Next. So in closing, let me just talk to you in a high level view of a technology value chain. So at the top, data is king, and data aggregation and access to data sounds like a pretty simple thing to do. In the US energy market, that's not the case at all. Individual generators have their own SCADA systems. Every utility has their own data repositories and interface requirements. And while there's some standardization, it certainly is not ubiquitous. So data aggregation, data integration, then data housing to be able to open up opportunities to advanced analytic tools that then open the gateway to optimization tools that allow you to balance all of this out becomes a critical factor for success. In general, the technology value chain is driven by the boxes. There are assets that produce energy to meet demand. There are supply plays associated with how you manage, run, and optimize those assets. There are transactions that need to be managed through everything from deal capture to contract administration to customer care, all of which ultimately feeds reporting, which is both financial and budget reporting, compliance reporting, whether that's environmental or otherwise, all of which leads to how did I effectively optimize my energy portfolio? Technology gaps exist across every factor, every piece of this diagram. Every component of that value chain has needs today. And those needs require new answers, new entrants, new ideas, and new thought processes. You go ahead, Nancy. So we've seen that the opportunity is vast. We've seen that the challenges are complex. Let's talk about how we actually go about getting our product or solution in front of people in the U.S. In the U.S. market. Well, over the years, we've come up with not only a solid roadmap approach with the right steps to ensure success for companies entering the U.S. market, but also key concepts that should underlie all aspects of this checklist and roadmap approach. And it starts with the definition of strategy, clearly understanding and articulating what it is you want to accomplish in the U.S., both for you and for your potential customers and buyers. Understanding the fit that you have in the U.S. market, what makes it unique, what's unique in your product or solution, and how do you leverage aspects of the U.S. market in ways that drive a differentiated value proposition for you. Clearly articulating what that value proposition is within that framework and setting a marketing plan that allows you to cut through the noise in the market to get your message across in a unique way. Putting together the right support and resources around your market entry. Working with people that understand not only how to craft messaging, but how to craft messaging that resonates with the behavior patterns of buyers in the U.S. in the individual segment that you're going toward. Project developers are a very different market messaging target for new OEM, generation technology than going to a buyer with a behind the meter, reliability and load management, load flexibility value proposition. Overall of this has got to be a commitment to process and structure. Lay out the roadmap the right way, addressing the right issues, which we'll talk about here in a minute, and then following that in order to implement each step in the process with the same kind of commitment that you had when you made the decision to enter the marketplace. So let's talk about that. The next three slides cover three general segments: natural gas, power, and technology. The questions are similar, but they're slightly different in each segment when it comes to strategy and direction. But in general, it talks to what I just spoke about. Which segment are you entering and why? What are the key drivers for you and your value proposition? How does that relate to geographic focus and the different markets available to you within the US? What's the differentiation strategy and how do you communicate that? And what's your overall budget and what are your goals and objectives? And are those realistic relative to the appetite? So you think about market entry mechanisms, buy, build, and partner is pretty obvious. But what does that mean for a US market entry? It might be attractive to go buy Constellation Energy as a way to gain a huge market share, but that may not be realistic. So understand the relationship between your budget and your objectives for, what you hope to take out of your US market entry. Define the specific targets for outreach. This is not, unless it's unique, it's probably not a widespread mass market, I'm going to advertise on Google, strategy. It's how do you get your message to your buyers in a way that is consistent with your organization and culture. So if you're gonna buy, understand the budget and the types of targets you could buy. If it's about building, as you need to have a presence in the U.S., whether that's just an office and a mailbox and website mentions and a phone number or a couple of resources. U.S. buyers want to see that you have a U.S. presence. If it's partnering, the questions are different, but it all comes down to how does my value proposition enhance the value proposition of this established entity that I want to partner with in the US. So if you'll go ahead, Nancy, we can flip through. On the power side, there are opportunities in behind the meter stuff and energy storage at both the utility scale and individual level. There are opportunities in trading, there's opportunities in retail, and there's opportunities in providing load flexibility. So, but the buy, build, partner key questions, steps, and strategy and process are pretty much the same. Go ahead to the next one. On the technology side, it's understanding how you fit within the broader landscape of an overall energy portfolio for your target buyer.
Let's move into the implementation steps. Nance, if you want to go to the next one. So this one talks about implementation. Obviously, before you implement, you need to decide yes or no. So these steps also relate to whatever the business case is that you're taking to your board, or how much money you got to raise, or so forth and so on. So I skipped that part because to me that was pretty obvious. But doing the homework, if you will, on each of these steps doesn't have to be in this particular order, but they're all kind of relevant. They're all very relevant. And then a lot of things we don't see when having worked on, I don't know, 20 or 30 odd business cases for board review. It's the adaptability, which is why I have it out here on the left. Typically, a lot of the companies don't really understand the importance of adaptability in the US because it's so fragmented, so many different markets, so many different segments, many different rules. it's not a solo shot kind of thing. But let's go through some of these steps in a little bit more detail. And I'm not going to read this to you, but you can do that. Next. So this one talks about uh, the market structure. It's to me the first decision. What do you want to do here? What market are you entering? In our experience, we get companies that do this initial phone call, which or now video session, say, well, I want to come to the US. I want to trade power. I want to be an ERCOT. See, okay. How'd you arrive at that? Well, probably they did Google search, or maybe they went to a conference in Houston. Who knows? We say, okay, you dig into the rest of these steps. Okay, what's your business model? What's your licensing or buy, build, all that. So it's that first decision. What do you want to do here, and why, and what do you offer? Which then leads into your business model. Well, do you want to buy, build, or partner? Well, you know, buying actually, depending on what you want to do. If you're a technology company, buying can make sense depending on what it is, especially if you look at what's the difference between buying somebody that's already got a bit of a market share and you don't have so much investment in modifying your system to work here, or partnering for the same thing. Maybe they fit the value chain into your solution is one part of the value chain, so you want to partner with other parts. Or if you're trading in retail, buying can be a lot faster than going through all the licensing and starting from scratch. It's pretty expensive to get one customer and build that way, but it's also can be a lot cheaper than buying. Depends on what you want to do. Next. So either way, because this is also part of the business case, we see often, having worked on business cases that go to the board, they talk about how much money it's going to take to get here. This is more about how much money does it take once you're here. To me, that's equally, if not more important, that, okay, I'm going to spend X amount of money to enter the US. I'm going to buy something and do this. What do you need for the next 3 to 5 years from the credit and capital requirement? That's to me just as important. You know, Same thing with the market access. So I say I want to be who knows, well, I want to develop solar in the US. Oh, that's great. You know, do you need interconnection rights? Do you need permits? How's all that work? Some states are a lot easier to get permits and so forth than others, you know. So knowing that market access part is just as important as knowing what you want to do. Uh, and a big part of that is not just the permits and the licenses and so forth, it's the location, because price is based on congestion. So having power or gas and being able to get power and gas into markets that have congestion issues, you'll get a better return. Or are they? How's that work? Happy to help you with all that. That leads to, of course, price formation, which is a huge component of what I just talked about. All of this comes down to risk management. So in a business case, what we see a lot of is, here's what we're going to do. Here's how much the investment's going to be. Here's maybe how many people we need to hire. There's sort of a broad implementation plan, but they didn't we rarely see people who actually address the risk management of once you're here. So happy to help with that as well. Moving along. So this slide, couple key concepts, and I'm going to save adaptability. We talked a good bit about location. Uh, all the things before this will tie into where. Uh, you know, Being able to say, okay, I want to do this in a certain market. You may find, like, we were helping one not that long ago, a couple years ago. They were like, well, I want to be in the wind business, I want to develop wind farms. What we found is that's great, but they were thinking Texas. Well, Texas has got more wind than they know what to do with in certain times. That's why the price goes negative in Texas on certain times of the day, because there's too much renewable, too much wind. We ended up reshaping their strategy, and they ended up getting into the repowering wind business in California, where they had a lot of wind farms from the back in the 80s and 90s that are basically the turbines are on the ground, but the sites were there, and so you know they had the transmission access. So sometimes we can help with location what by exploring what do you want to do versus, hey, what we have this other concept to also give you an idea, because that's what we do. Here's your idea, here's what we think. Happy to pursue yours. You're happy to consider ours. Um, Same thing with the tech and data readiness. Knowing where to get the data, how to get the data. For example, meter data in the US is really messy. Every utility's got a different EDI component, unlike other parts of the world that have already moved on to XML and more standardization. So finding either the solutions that you might need, or if you're a solution provider, who your competitors are, what they have, what you could be doing differently that makes a better solution for the market. Because it's easy to say you need to find a niche and have a competitive advantage. But if you don't know the US market, you don't really know how what you have is a competitive advantage. So we're happy to help you with that. Um, and the key piece at the end is adaptability, because what you're coming to do now, whether that's trading, retail, generation, what have you, as Eric has pointed out previously, it's all changing. So how how adaptable to what you want to do are you, and can you be? So with that, let's move on to the next slide. So this is just our pitch. We've been doing market entry for many years in the US, many different projects. Um, Planning stage, I know the steps and the stuff Eric talked about look very complex. This can be done in a matter of a few months, depending on how deep you want to go. If we're doing a voice of the customer survey, maybe a couple more months, because it's a little hard to get people to talk. But we can go through the first planning stages literally in a matter of a few months to get you to a business case for board approval. Then you move into the entry stage. We've gotten many times licenses for gas, power, uh, tech, what have you. We can help you get incorporated, or get you an attorney that does that stuff. M&A support. Once we know what you want and you decide you want to do a buy strategy or even a partner strategy, very similar process. We'll scope who's out there, what they look like, provide a profile. You decide which ones you want to shortlist to go after. We'll contact them, make the introductions, and then help you through the M&A process. Uh, some companies, especially more the tech companies, want to start with not the big expensive market entry, but I'll call it a test market, where they've got a software solution. They want to see whether people will bite before they spend the big bucks. So we can provide office space, help your website look like you're in the US, for phone number, and a business development contract person to start talking to your targets. So you can truly assess in a more of a sales mode than a research mode whether there's actually buyers before you start modifying your software and doing all that. Uh, the support stage is depends on what you need. We can provide contract, we can recruit people, we can do project management, whatever you need to get you off the ground into the US. So with that, love to have a one-on-one conversation. What are you thinking? We'll share our ideas. We'll give you honest feedback. No obligation whether you hire us or you don't. Love to have these conversations. So with that, thanks for attending. I know, Nancy, there's a number of questions that have come in from the registration process. Why don't we jump into those?
Okay. The first one I have here asks, what have you experienced as a key mistake companies make entering in the US markets?
Let me start that one. There's a expression in the US or it's called ready, aim, fire. It's like for shooting something. So that would make sense. You get your gun ready, you aim it, and you fire it. What we see oftentimes is a different approach by companies that are in a hurry, and what I call it ready, fire, aim. They're so anxious to get here, and they've got this board approval or whatever. We're gonna go to the U.S. Okay, let's go. But they haven't spent the time doing the research to actually aim at what they're going to do. Um, we see quite a few uh, don't really make it because they haven't aimed. So I think that's the main mistake I see.
Good point. Um, let's see. As a software company, is there a way to enter the market without a heavy investment? Who would like to take that one?
I'll do that one, and I'll give Eric a chance on some of these. So, I
It's
kind of
okay.
alluded to that a little bit ago on that entry stage. You can do a looks like you're here contract business development, that carrier card. So on a fairly inexpensive try before you buy kind of an approach. We do recommend at least modifying your website so it looks like you're here and you've got some US content, because we often see, well, it's universal. How you say it in your country is different than how you might say it in the US. So could be the same more or less content you already got on your website. Just, like I like the concept where you've got on your website an American flag or something. So people say, well, I go to the US site. And they see more or less the same thing you've got, just modified to fit the language is how it works here.
Let's see. This one has come in, but from one of our listeners. The gas and power market overview was good, but we need much more in-depth information. How do you suggest we do that outside of Google or Chat GPT?
Great question, because it's actually a critical question, because Google and Chat GPT are good, but it only goes so far. It doesn't go into the depth and level of the detail. Uh, we do this all the time. Like we just did one not long ago for how the capacity market works in the pipelines, which gets into the details of how many times a day, how's the release work, how's the auctions work, the bidding, etc. So depending on what you want to do after we discuss it, we can provide you much more in depth, or if we can't, we can point you to who can.
I think, I think, Peter, this is really that next level down. Strategy is we want to enter the U.S. market. The fit is we think that this is where we fit. The next question is, okay, what do we have to do to be successful in that particular segment where we believe that we fit? And, this is where working with someone who's, already deeply experienced in that market can shortcut your time to assessment significantly by providing specific information around exactly the kinds of things that you'll need to know to assess both costs and resource requirements for that part of your entry plan.
Makes sense. Is there another
Let's
one?
see. Yeah. We're interested in generation assets. In your opinion, is it better to be an investor or buy, build, or partner and to achieve a portfolio of assets?
Eric, you want to take that one?
Sure. The first thing is there's no generic answer. It really it's driven first and foremost by your objectives. How fast do you want to, get to profitability in the U.S. relative to the cost that it was required to enter the marketplace? A market assessment study will help reveal the types of companies that might be available as targets for acquisition or partnering. How do those existing platforms fit relative to, your scalability objectives and goals? What are the key needs of those businesses that you want to approach? Is it capital? Is it talent? Is it an extension of their value proposition? What kind of a fit do you have that creates the benefit to them considering looking at some type of M&A or partnering activity with you? So no single answer, but there certainly is a well-defined process that we've developed to help you get to those answers more quickly.
I
Okay.
might only add, if you're coming in as an investor, which we see a lot, we've worked with a number of those companies, don't forget to also understand how asset management works, how the markets work, what the trading, what the real-time data, just being a silent investor is okay, but your return depends on all the other factors. So understanding them is just as critical as if you were an owner. Is there another one?
Yeah, this one is a lot like that, except it's as a trading company. Do you think it's best to buy or build?
I think,
Um, yeah, go ahead, Eric.
yeah, I was just going to say, when it's the same question, it's the same answer that there is no blanket correct answer, but there are different aspects when you think about, a trading entity or services entity versus asset ownership or asset development. In trading, liquidity is the key consideration, and building it takes time. From making the right connections to negotiating counterparty agreements, master agreements, becoming a market participant. All of that is a fairly long road to travel. Um, the 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 benefit to looking at an acquisition first strategy is that you inherit that that work that's been done. You inherit relationships. You inherit master agreements with trading counterparties, and can step right in to bring uh, your specific value proposition and approach to a platform that already exists.
I think I agree with all that. The only thing to really assess if you're buying, other than, what do they have, financials, all the other stuff and due diligence, to me, a big risk of buying is traders are not known to be particularly loyal. And if you're buying a trading organization that's built on pretty much all relationship trading, the risk is, do the traders leave? So otherwise, I agree. Everything else, yeah, you can build. Uh, Literally, probably within a year, we can get you all your licenses and your counterparty agreements and your pipelines and you ISO memberships and all that stuff, all the infrastructure stuff. You still got to hire people and start by getting counterparties and start trading. So, depending on your patience level, it's much cheaper to build. It's much faster to buy, and you can grow much quicker that way. Next, is there another one?
Yeah, this one is about which segment of the market. They're not sure which segment they want to enter, and they want to know how to go about deciding.
Eric, you want to shoot with that one?
Sure. I mean, most likely you have some idea already. You have some thoughts and opinions about what's worked for you in other markets, other market entries, if you've done any before. But really is think about what are your customers, what are your buyers like about what it is that you do for them, where you're doing it today. And then uh, a discussion with us that leads to some kind of an assessment allows us to modify those things that have worked for you elsewhere and fit them into the U.S. market structure in a unique way. That opens up the opportunity to evaluate different segments, different geographical markets, um, you know, buy, build, partner decisions. All of this should be taken as not as an afterthought, but rather as one of the early steps that you take in the process of developing your roadmap is understanding that segment and how you fit in that segment, what you're going to do to be successful in that space.
That's good. I don't
Okay.
think I can add anything to that. That's good.
Okay. Well, this person wants to know how does a new market entrant cut through the noise and become noticed?
Well, I'll defer to Eric on this a little bit, but to me, that's I'm guessing that's coming from a tech solutions kind of a company. Because if you're trading, um, we have seen in the trading arena, and I'll leave the tech over to Eric, some of the stuff like we're seeing, especially coming out of Europe, where they've really gotten into algo trading in a big way. Um, Algo trading in the US it's here, but it's still in infancy compared to what it is in the Europe markets. So that's one aspect of that. Otherwise, trading capacity it's really all about or trading anything for that matter in the US. It's the same in Europe or Asia. It's data and how you analyze it and how you make decisions off of it. Maybe Eric, you got a different perspective from a tech solutions type of a provider.
Well, I think it's really all about knowing who you're targeting your messaging toward, and there is a lot of noise. However, there's also a lot of tools to be able to access the right targets for your messaging in ways that traditional approaches didn't really accommodate. In the past, it was advertising in trade magazines. It was showing up at conferences. It was joining trade associations. All of those things are still viable tools within the overall marketing strategy, but being able to leverage things now like LinkedIn, and other avenues of identifying and specifically targeting your message to a much more narrowly focused audience creates opportunities to cut through that noise in a unique way. So overall, again, as a part of the implementation roadmap, having a well-defined marketing strategy up front will save you a lot of time, money, effort on the back end, knowing how you want to attack the market with your messaging and the channels that you're going to use to do that, and working with somebody who understands how to cut through that noise at first is critical, simply because you're never going to have an opportunity to make a bigger impression than you have when your announcement that you're entering the U.S. market is put together. So building off of that, being ready for it, being ready to move quickly when the first announcement and press release is made is a key part of getting initial traction and visibility.
Yeah, well, one of the things I see, I'll give you an example. In a couple of weeks here in San Diego, there's a fairly large trade show called Distributech, about 15,000 people. Uh, and the exhibitors are mostly all like technology players, and the attendees are a combination of utilities, some retailers, not very many traders. And it's always interesting. I've been going to that for a long time. Every year you go around, it's like a third of the booths have the new message of the year. Back in the day, it was smart grid. Everybody became a smart grid solution. Then everybody became a distributed energy solution, a grid edge solution. So I think part of creating the message is what is it you do that really differentiates you? Because the good news is because of all this chaos, everybody's looking for something to solve their problem. So that's the good part. Go ahead, Nancy. Is there another one?
What are the key attributes of success that you've seen with clients entering the U.S. market?
I could be cavalier and say they hire us, but we'll go a better answer. Go ahead, Eric.
Uh, let's, this is really what this webinar was about, and maybe in answering the question, we can do a nice, concise job of summarizing. I think it boils down to, kind of three things: plan, budget, commit, and then execute, which I guess is four things. Um, you know, we've talked about the importance of answering the strategic questions up front. Know what you're offering and why, and where you intend to offer it in the U.S. Understand the problem that you're trying to solve. Engage with people who know the space that you're targeting in order to gain in order to gain the benefit of their experience to shorten your maturation curve in the U.S. market. Create a realistic budget uh, based on all of the above, and a clear business plan for market entry that you remain committed to, uh, to launch into execution. Few things become more expensive for a company than half entering a new market, right? Particularly a foreign market. Uh, Successful market entry requires commitment, focus, and the time and attention that is commensurate with the level of importance of this as a key strategic initiative for your organization. So, avoid the time sinks and disappointing results. Partner up with the right people, whether it's us or someone else, that can help you find shortcut answers, connections, and connecting to people and decision makers, and go, uh, you know, go and realize your goals. Uh, there's plenty of opportunity here. It's just there's a right way to go about it and a wrong way to go about it. And going about it the right way yields tremendous results for those that can remain committed to the process.
I'm going to just pick one little item because there's so many to make it successful that we run into on a frequent basis. And that is, do I send somebody over from my country to run the US, or do I hire somebody in the US? There's pros and cons to both. I'm a believer of you should send somebody over, because if they don't, if you hire someone in the US, I would actually do both. I would send over my country manager from your company who knows how to navigate your company, knows the people in the different departments, finance, legal, etc., and can navigate the market from that perspective. But the con is they're not gonna have the depth of how the US market works. So I'm a believer of your next hire is the number two person that works for your country manager that does have the depth and experience of the market. The combination of the two makes it much easier to be successful than just hiring. We see quite a bit. They hired a country manager and then they hired a salesperson, or one or two people that are not really in depth, almost like a country manager number two. I don't believe in the co-CEO thing, but uh, that's one of the critical things, decisions to make. And I'm a believer if you need a team of two, one from your company that's got access to leadership, and one from the US that knows your space inside out. That's my 2 cents.
Um, Finally, um, speaking to that, we have a lot of smart people who have been successful in our company. So why do we need you or someone like you to help us succeed in the U.S. market entry?
It's a,
So there you go.
Can I
that's a
start
great
that one,
question.
Peter?
That's
I,
a
I,
great, that's a great
yeah, I
question.
love that question. Can I start with that one?
Yeah, go ahead.
Let me turn it around on our questioner. You know, I'd encourage you to think about what's made you successful in your own market, right? Likely it involves leveraging your in-depth knowledge of certain things. How your market works, what drives decision making from buyers and partners in your country, the contacts and connections that you have, the language that you use to communicate with your customers and prospects, today. And I don't mean English, Spanish, German, whatever. I mean understanding the cultural language of how people make decisions and what drives customer behavior in a sales cycle. You know, uh, these are all the things that you're going to need to be successful in the U.S. You know them inside out. You've leveraged them successfully where you are. It only makes sense to, find access to resources that can give you those same advantages in this new U.S. market for you. So that's my answer. Um, is find the way to leverage what works for you where you are by bringing a local flavor to it.
I works for me.
Well, I think that's all we have time for. There are some other questions that you're going to need to get to, I guess, through email. Just answer them personally. I will make a list of those questions for you. Um, I want to thank everybody for attending our webinar today. I hope you have found it very profitable, and we will see you in the next one.
Thanks, everybody.
Thank you.